There is so much anticipation building over the direction of gold. Over the past year, it has had a spectacular run, up 41%. That's nearly double the gains seen in the S&P 500. But with money piling in, more bulls than bears, is gold's run about to end? Let's bring in both sides of the argument. Our bull, Rebecca Patterson, head of global foreign exchange and commodities at J.P. Morgan Private Bank, along with our bear, Tom O'Brien, editor of the Gold Report. Guys, good to see you. As we begin our discussion, we're going to show people an intraday chart of gold versus the dollar and a 3-month chart of gold versus the dollar. And I think they tell the same story. At least to me, Rebecca, you tell me. Seems to me the primary driver of what happens to gold is what happens to the dollar. When the dollar falls, gold strengthens, and when the dollar rises, gold falls. Do you agree, Rebecca?
Yes, I absolutely do. And that relationship's just been getting stronger over the last 10 years or so. And it's one of the reasons why if we do get a dip in gold, we'd be looking to buy it.
Because you believe the dollar gets weaker from here?
Absolutely.
All right. Tom, do you agree with that assessment?
Nice to be with you, Marie. Michelle, I'm sorry.
That's okay.
I don't agree with it, and this is why. You have the euro dollar this morning 150. It gave it up. That's going back to 140. You have the yen is getting much weaker. Okay. The pound, they're in a recession. They're going backwards. That's getting weaker.
Yeah.
The Canadian dollar, they're screaming up there in the central bank. That's getting weaker.
And your point is what?
My point is real simple. The dollar, okay, we got long gold at 282, okay? The dollar's gone from 121 down to 71. You had a counter trend bounce to 89. The dollar right now, all it did is this. It came back to the breakout area of last August, okay?
So you're making the argument that the dollar and the gold are not necessarily so interrelated, right? Is that your point?
No, they're totally related.
Okay.
But my take is this. The dollar is already to hell, okay? The dollar wants to trade to about 80 to about 85 right now. And what that's going to do, as it does every time, it kills all the commodities. Now, you know, as to being a bear, I'm a short-term take our money off the table, okay? Gold's going to go a lot higher. What it likes to do is build these bases. But all these currencies around the world, okay, are going down against hard commodities. The euro dollar.
You're a short-term bear on gold, is
right.
what you're telling me. Okay.
That's right. And the euro dollar is the most important, and that broke today. That's why you see the market broken, the S&P broken. That's why you see commodities breaking, and the euro dollar is going to get a lot lower.
So, Rebecca, he doesn't really disagree with you, actually. It's just we're talking about time, right?
Unfortunately, you're not getting the dramatic TV I think you were probably hoping for, because I do think we agree. In the short term, I think if gold can get down around 1026, that's a big technical support level, then I think we'll probably see a base there and we'd be looking to buy. We've been selling a ton of puts on gold, short-term puts, 6 months or so with 975 strikes. Again, if it fell that much, we'd be thrilled to buy gold for there, because we think in the longer term, even though the demand-supply story is a little bit mixed, we still think the bias of risk is for gold to go higher and the dollar on a trade-weighted basis to go lower. Maybe not so much against the euro or the sterling or yen, but on a broad basis, we still are happy to be bears on the dollar.
All right, so an actionable item there from Rebecca in terms of how to play gold from here. Thank you, guys. Good discussion.